Hi there, traders. This is Brad Gilbert with FX Market Insight for Friday, the 7th of August. All right, now just having a look at the major currency pairs. There's been a few little tweaks yesterday over the last sort of 24 hours. The few of the pairs had a little bit of a dalliance with the top side. The sterling now should have been a little bit more cautious with this. Obviously, with the Bank of England, there was enough momentum just to get it above the trend line by about 20 points, get everyone into a bit of a frenzy about it going up. Us included, and then it just started sort of churning sideways and started to fail. So that was the main catalyst, and that got Euro a little bit interested, but not enough to trigger a break. And the Aussie sort of had a bit of a move to the top side, and the Kiwis just didn't really come along for the ride. So what that's done for us is it's really cleared, taking the pressure off the top side in sterling, if anything. And now what we've got a situation. Actually, I'll just bring that Aussie. Now we've got that new high, just taking the resistance level back up. Now, what we've got a situation is we've got the non-farm payrolls today, right? Now, this would be fever pitch coming into Friday trading non-farm payrolls. Now, the general thinking is, if I just give you a look at the news, you can sort of read some of this yourselves. Well, they're saying dollar out of favor. Well, actually, the dollar's actually come back a bit. You know, I'd say this is a decent bit of squaring up ahead of the non-farm payrolls, not just the weekend. The thinking is if we get a really weak US non-farm payrolls, it's going to reinforce the whole crap economy situation. I was going to say a few other things there, but really slowing momentum here in the US, and that could lead to further US dollar weakness. Or a really good number, and I tell you what, it doesn't look so bad. At the moment, now you can see, if I just bring you back to the, say the dollar index and give you a look at this, at the moment you can see the dollar just taking a little bit of a move to the top side. Now we do have resistance levels all the way up here. So regardless of really good non-farm payrolls, it's got a hell of a lot of work to get some sort of momentum going higher. But you'd think just with it looks like a bit of a short squeeze leading into that. Now, those that aren't aware of what a short squeeze is, just because the resistance level is so far away, right, it just starts to slowly climb and it starts to snowball through various levels. There's no real clear resistance level here up until 330 on the dollar index. So what you get is you get a slow transition of stops being triggered all the way up, and they call it a squeeze. We might see this squeeze a little bit higher coming into the numbers. I'll tell you what, if they come out week after that, it'll drop straight back down. So with that, you've got to factor this in with your major currency pairs. Now, I do like still the idea of getting short dollar CAD back towards 130 for the figure. That looks like, to me, just at this point. Now, obviously, any orders you have open should be cancelled before the non-farm payrolls. But I can tell you what, really strong US numbers here will put pressure on 118 the figure in euro and 130 sort of 85.90 in sterling. I think Aussie's got a bit of a way to go, but they're two pairs with close resistance lines that I think you should really be focusing on. So euro and sterling are going to be right in the groove. Dollar yen, well, I wouldn't be looking at that too much at the moment. Now, the other thing is as well, just coming into Friday's trade, don't forget there is the Canadian employment numbers as well, right? So dollar CAD is going to get a little bit tricky as we go forward. And if I just bring you back across to the daily market insight, just to wrap it all up, funnily enough, one thing that you can check out where the markets are sort of discombobulating a little bit is, if anything, there was a slight risk on sentiment. US equities up slightly. What we're seeing in the Asian market is that equity market's getting tapped a bit. It looks almost like a bit of a risk-off profile, all right? Usually comes from the North American markets, but at the moment, the Asian equities are lower. So out of we've lost all that sort of clear market direction across the board. If anything, you could say dollar CAD's going higher, but it's still within recent ranges. I still like the idea of selling that at the moment. But, coming into Europe, middle of Europe, but that hasn't been, triggered and you're not in the trade and it's falling back. It's probably going to be worth cancelling leading into the non-farm payrolls. But let me just show you, like when you look at the moves here, right? So if I looked at, dollar CAD, so it's pretty much come from, if I just get my pen, around 132.80. By the time it gets to 134 the figure, it's gone 120 points. It's going to be running out of steam. If anything, that maybe that level at 134.20 might be a little bit better, but that's just probably as far as it's going to go. The non-farm payrolls and the Canadian employment numbers can reinvigorate that momentum. But so you want to have a good close look at that. The rest of the pairs didn't quite get into it. So they've been cancelled, especially coming into the non-farm payrolls. Usually what happens on a Friday leading into the big data, and there's probably no bigger data outside of the Fed than the non-farm payrolls itself, the market starts to square everything up, right? They're waiting for the big move. If you get dollar direction, trading's easy. So more or less, traders across the board at banks all over the place square up and go, you know what? I'll wait for the non-farm payrolls. I'll get the US dollar direction there. Then I'll put the trades on after that. And you know what? Trading after this event, an hour, like Monday, may even be better than after the data's released at the start of that North American session. So just keep an eye on it. The other thing, just a bit of note of warning, there are many data releases coming out. This is connected with about 6 or 8 different numbers. Obviously, the unemployment rate being a key one, the non-farm payrolls, and the average earnings, right? But then you got a number of other figures there as well. So just make sure you're watching that. Keep an eye on the equity markets. They will be important in determining what is going on there as well. And if you do have that correlation matrix, it's worth giving that a spin just to see what is actually working with what. Okay, and just having a look here, you can see big dirty red one, Euro, NASDAQ, right, looks pretty good. And also dollar Swiss with a good correlation there. Anyway, that gives you a little bit of insight. Maybe sort of tweak exactly what pairs you're looking at. At the moment, the dollar is acting quite uniform across the board. Okay, it's rallying at the moment. So just bear that in mind. As I said, it's not really the risk on, risk off sentiment profile. So just be careful with the correlations and what you can generally see, because at the moment, it's a bit of the currencies are doing their own thing. What we're seeing is a slight dollar recovery coming into the US non-farm payrolls. You can see it pretty clear as day on the dollar index. All right, guys, all the best with the non-farm payrolls, and we'll catch you later on. Cheerio.